Greece approving a $96 billion bailout program ahead of its payment to the European Central Bank next week. For analysis, let's bring in Simon Smith, the chief economist at FxPro, with me now from London. And Simon, the IMF calling this development a very important step forward. What do you say?
Absolutely. As you mentioned, in a week's time, there's a 3.2 billion payment of euros back to the ECB of bond redemptions. That's immovable. So this agreement we've had and then goes to Eurozone finance ministers today unlocks the first euro 23 billion tranche, which allows them to go through that. So as always, it's right down to the line. But yes, it's a key milestone because now the next tranche is unlocked. And the positive comments from the IMF as well, probably helping as well, because that brings them a little back on track. But I think there's still quite a bit of ground to be made up between the IMF and the ECB and the Eurozone finance ministers to getting them back on board, because they've become very sceptical of the process and also distanced themselves to a degree from it.
And of course, this is Greece's third bailout since 2010, but has anything really changed? I mean, sure, they're going to agree to austerity measures, but that doesn't change Greece's debt situation, which many analysts say is unsustainable and is expected to reach 201% of its GDP next year.
Exactly. That's been one of the key debates and also one of the linchpins of what Syriza was voted on back in when they came in earlier in the year. So I think debt reprofiling, as it's being called, rather than debt restructuring, is going to be back on the agenda probably around the October time. But what that does is it doesn't write down the debt owed, it just pushes it further down into the future. So the average maturity of Greek debt at the moment is around 15 years. Compare that to around 7 or 8 years for average for other Eurozone governments. So already a lot of debt is further into the future, so reprofiling would push that even further into the future, which naturally reduces the near-term burden. But still, it's a bit of a noose around the neck of the economy, and one of the reasons why Varoufakis, previous finance minister, did resign. So ultimately, we need to see a write-down of nominal amounts owed.
All right, and there's also reports that Greece's economy grew by 0.8% during second quarter. Now, that was right before the debt drama intensified when Greece implemented capital controls in late June, but still some encouraging news, right?
Yeah, but as you say, it is relatively retrospective. Still, the Greek economy has contracted by more than 20% since the peak in output 6 to 7 years ago. So, the economy has undergone a huge contraction. So this growth we saw in the second quarter is more than likely to be unwound in the third quarter, given the sort of uncertainties and everything else that happened. So on that basis, it's I don't know. It's pretty a small reward in the bigger scheme of things.
Sure. And what do you think is next for Greece? I mean, how seriously should the markets take Greece into account as this 5-year-plus debt saga seems to be far from over?
Yeah, so there are more hurdles up and coming. It's very likely that we're going to have another election. It seems, from the vote we had, even though the sort of rebellion, let's say, from Syriza MPs was less than the previous two recent votes, he doesn't have enough to support a working minority government, so it's very likely we'll see a confidence vote and elections in September, and then negotiations in October about debt reprofiling. It's not going away, and ultimately that's a view that until you actually see debt written down, we're clutching at straws really in terms of allowing Greece the freedom or the scope to actually grow on a sustained basis. So
all right,
it's not
Simon,
going to go away.
We'll leave it there. Thanks very much for joining us. I'm Scott Gamm, and you're watching The Street.